presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compac Market Wrap YouTube update for March the 9th, 2026. I'm Mo Ansari, President of Compac Asset Management, and thank you for joining me today. First of all, a quick housekeeping note. Click on the subscribe button so whenever I post an update, you'll be notified and you can watch it at your convenience. Also, you can go to compac.com, click on Insights, and you can hear a much longer version of this update. That is the podcast that Javed and I do, which gives you an update in a lot more detail. So that is compac.com. Click on Insights. If you need your help, you're worried about your portfolio over the weekend with the war going on in the Middle East, everything on fire, you were concerned, you couldn't sleep at night, then you have too much risk. Give us a call. We'll be more than happy to give you some ideas on how your portfolio should be positioned. Send me an email at invest@compac.com or just give me a call at 800-388-9700. Let's start with the markets. Markets down 1.99% for the S&P. That's how much it was down. The Dow was down 2.92. NASDAQ down 1.22. The big losers last week was the Russell Small Cap Index down 4%. We saw the international markets down 6.72 and the emerging markets down 6.88. So markets took a tumble. They were down a lot last night, about 2% for the S&P. When you look at the year-to-date number where we are right now, we are down 1.32% for the year. I mean, the market, that is nothing when you look at the market. Markets on average, go down 14% during the year. There's a point in time during the year when on average the market is down 14% from the highs to the lows during the year. That's average. Sometimes bear markets, that's 20%, a correction more than 10%, a pullback more than 5%. We're not even in a pullback territory yet as far as the market is concerned for the year. So I know there's a lot of anxiety, a lot of emotion when we turn on the television. There's a war going on. Bombs are flying, missiles are flying, drones are flying, and all of the stuff that you hear. And it's very emotional. It's hard to keep your balance. But as long as you have the right allocation in your portfolio, you will see volatility, the ups and downs in the market. As long as you have the right mix, you have the shock absorbers built into your portfolio so you can handle the volatility. Looking at energy, it was the only sector that was up last week. Everything else was negative for the week. Everything was negative on the downside. For the year, energy is the number one sector, followed by consumer staples. Then we've got industrials, materials. On the bottom here is technology. I mean, technology is negative and financials are negative. So those are the two that are doing the worst. They did the best last year. They're doing the worst this year. That's why the market having the right balance. If you have all technology stocks, the Mag 7, you were feeling wonderful last year. You don't feel as good this year. That is why keeping a balance over the long term, all of this sort of balances out. One sector takes off, the other one comes down, then the other one goes up and the other one comes down. So we see this volatility in the markets and we see the ups and downs in the markets is what we see. Oil was up. It was up over $100 a barrel, pushing 110. Then right a few minutes ago, I'm looking at the markets going into the close right now. President said the war might be with Iran complete. What does that mean? Is it over? And that's going to be the big question. How long is this going to last, the war? If it's going to last for weeks and weeks and weeks, and we see 20% of the world's oil shut out of the world market, we don't need it. We have plenty of oil here, but there are countries like South Korea and Japan and a lot of the other countries, Taiwan, require a lot of the LNG and the oil being imported through the Gulf of Hormuz and through the Persian Gulf, and it comes from there. That has been shut out. So a lot of these countries did not do well. They're being attacked by Iran. They're being attacked by missiles and drones, and it's very hard to stop the drones. And so I think there's a lot of pressure to stop the war. But if you stop the war, basically Iran has said they've put Muqtada Khomeini as in charge. That is the son of Ali Khamenei, who was the previous supreme leader. So they put Muqtada Khomeini. If they put him in, which he is in now, he is a tool of the IRGC. What is the IRGC? That's the Iran Revolutionary Guard Corps. They're the most right-wing radical. They're the ones who support all these terrorist organizations throughout the Middle East. So now, instead of having Khomeini, who was terrible, evil person, but now we've got somebody who's more even evil because Muqtada Khomeini has not much power. Basically, the power has gone to the IRGC, which is the Revolutionary Corps. And if that happens, then we have really gone from bad to worse. How is this outcome war going to end? If we can get in and get all the uranium that they have there, which is around 500 kilograms of, which is basically bomb grade, it's 60% purified. If we can get that out, and we've cleared out a lot of the missile silos, we've killed a lot of the drones, we've done a lot of damage to the infrastructure. I think we can make a deal with Iran to get that uranium out of there and plutonium out of there. That's the bomb-making material out of Iran, and that'll put them back for 10 to 15 years. Will they continue to do all the stuff they have been doing? Depends, and we'll have to wait and see. But the regime change is not happening at this point. That's the way it is looking right now to me. So what did we achieve with all of this? If we do get the bomb-making material out of Iran, that would be a big positive. We would reduce their capabilities on missile strikes and drone strikes and missile manufacturing and all of that. That would be good. But again, to go through all of what we are going through, the world is going through, was it worth it? That's the question. But that is a different question. That's a political question. What do we get out of it? When does the war stop? That is going to be the big plus. Now, there's three kinds of bear markets. There's structural bear markets, where there's something wrong, where companies are not making money, everything is on leverage, people are buying stuff and borrowing money, which they don't have, like we saw in 2008 and 9. That is a structural problem. Then there's a cyclical bear market, where the markets just get way ahead of themselves, and they sort of come back down about 20%, correct, and go back up. And then there's the event-driven bear market, which is where markets go down because there's some global event that makes the market go down. People are concerned there won't be oil, there'll be inflation, so on and so forth. If that happens, those events that you look at, the event-driven market, wars, things like that, are transitory. They do not last a long time. They cause a lot of anxiety, wars always do, but those are buying opportunities in the long term. That is what we've seen, unless there's something also cyclically out of balance or structurally out of balance, which is not the case right now. Companies were doing very well before the war. They were making lots and lots of money. Profits were up. Economy was doing okay. So as long as we have that event-driven market, if this war stops tomorrow, we will see a sharp rally back in the market. So it could be viewed as an opportunity to buy the things that you've been looking to buy for some time. They've come down, they're on sale. I know it's anxious time to buy, but that's where you might want to look to. Yes, market could continue to go down. My technicals have turned down on the NASDAQ, or dot plot turned down. Usually it stays negative for 4 or 5 weeks, but usually the initial drop is where the opportunity is, and I'll show that to you in a second. So those are my views, the way I'm looking at this war in the Middle East at this point in time. Interest rates popped up from 3.97. We went to 4.15. That's where we went to, and that has come up a lot. The worst case, oil prices have gone up, gasoline prices have gone up. The people who pay the most are the bottom 10%. They spend 14% of their income on gasoline. The top 10% spend less than 1% of their income on gas. So it is the bottom 10% that are going to be affected, unfortunately, by these higher gas prices. Non-farm payroll came out and we lost 92,000 jobs. A lot of that was a strike at Kaiser that took away from the jobs being created in the healthcare sector, which has been the number one, And then we saw retail sales also weakening, down 0.2% month over month. So we are seeing a slowing in the economy. How good is this number, this unemployment number? I think it's month to month volatility. We'll have to wait and see how next month's number comes out. A lot of data coming out. We have the inflation CPI number coming out on Wednesday, which is expected to be up 0.3. Previous was 0.2. The housing starts come out on 1.347. Housing seems to be slowing down from 1.4 where we were. So we'll see exactly how we come out. We get the GDP, but it's a revision of the fourth quarter GDP. Looking at the technicals, we're seeing the markets sharply below the 50-day moving average, which is the blue line at 6,900, is below the 20-day moving average, 68.57. And then we have the 200-day, which is 65.87. We hit a low this morning of 66.36. That was the low. But we have come up sharply, nearly 130 points on the S&P from the low to the high. I think we could see this is wave 1, 2 back up, 3 down, 4 back up, and then 5 down. If we get somewhere around 6,600 on the 200-day moving average, that is an opportunity to take a look at the S&P. Weekly charts, we're below the 20-day moving average. If you get much below here, which is 6,600, that was the low that we made in October. We get below that, then we're looking at 64.32 as next support. NASDAQ got very close to the 200-day, which is 21,185. We got to 22,000 within nearly 100 points of the 200-day moving average. So we're seeing this, but again, it seems like we're still right here. This was the low, just below 22,000 in November in the NASDAQ. So we haven't really seen a lot of movement. The dot plot turned negative. The dots are up here now. The market is here, so we've turned negative. Usually when we turn negative, the dots get above the market. The vertical lines are the market. The dots are above that. That is my momentum dots showing the market. When it turns negative, usually we go negative for a number of weeks. Each one of the dots is 1 week, and you can see that's about 2 or 3 months of a down move in the market. We just turned negative last week. The dots went from being below to above, and dot is here now. So we could see 21,390, 21,400. We get below that, and then we're looking at somewhere around here, which is 20,000 for the market. And that could be 4,000 point drop in the NASDAQ from 24,000 down to 20,000. It could be a significant pullback in the market, but first we have to get below 21,400 right now. That's the way, but we have turned negative. We're going to bounce around here for a period of time. Yes, the war might be over. We might bounce back, but then we'll be worrying about inflation. If oil prices remain elevated, we still have the government shut down. We still have a lot of volatility, a lot of stuff going on that the market has to work through. Small caps were down below the 20-week moving average, popped back above it after coming down here. Support is 120. We are at about 124 today, or 125.15. That is the small cap, the IJR, the 600 small cap. This is the IXUS, which is the international ETF, down big last week, up big this week, came down to the 20-week, held it, bouncing back up today, up 0.86 from being quite a bit lower this morning. Interest rates had popped back up. We'd gone down to the 3.95 or 3.97 area. This was the low last October. We came and tested it right here, popped back up, got above the 50-day, tested, got close to the 200-day, but now we're coming back down today as we get news that the president might be deciding to end the war. We'll have to wait and see how that turns out. I think it's going to be back and forth, some negotiation for our next few weeks before we get there. Gold, which was up a lot, came back down, bouncing around. A lot of volatility here. Up and down is what we're seeing. 20-day is 468, 8.86. We are at 471 right now. And then we are at 447 is the 50-day moving average on GLD, which is the gold ETF. That's like buying gold, but you can buy it in your stock account. High yield bonds were down huge. over the last 4 or 5 days, but a very big move to the upside today, 0.5% higher after being as low as 79.54. We're at 80.12 today, so big move. A lot of reversals in the market. There's some talk that the war might be ending. As soon as the war ends, we see a sharp rally in the market. That's what we're going to see. But after that, reality is going to set in. What did we accomplish? What happened? Is inflation going to go up? How low are the oil prices going to go? What does the new government look like Iran? What is the posture going to be? So we'll have to wait and see. So it's still going to be volatile. But when you look at the overall, we were down about 4% at the lows in the market last night. We were down about 2% in the S&P from the highs. Yes, a lot of volatility, a lot of chop. That's where they shake you out of the market. You don't want to do that. You want to have the right assets. Those are my thoughts. Don't forget to subscribe to this channel. If you want to get some information on your portfolio, it is free. Send me an email at investor.compact.com or 800-388-9700. Those are my thoughts. Those are my observations. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.